Good morning. My name is Sarah Hare. I'm a director in the marketing team here at BetaShares. Welcome. I'm thrilled to be hosting today's webinar, Investing in the Companies Driving the Crypto Economy. It is our pleasure to introduce you to the BetaShares Crypto Innovators ETF, ASX code CRYP. It's certainly one of the most, if not the most, exciting product launches I've had the pleasure of working on and bringing to market. Crip was launched on the 4th of November, and the strong investor demand saw Crip smash previous ASX records with the highest first day trading value and the fastest first 100 million assets under management for an Australian ETF. We're extremely grateful for the support received so far. Today, we'll be taking a dive into the underlying index that Crip aims to track and explaining in detail what crypto assets are, as well as taking a look at the fund. Before we start, I'd just like to highlight some very important information. Crip may not be for the faint-hearted, and as you'll hear from our experts shortly, this can be a volatile sector. Today's discussion is general information only. We're not taking into account anyone's personal circumstances, and this is not personal financial advice. Before making an investment in Crip, you should fully understand the features and risks of companies with significant exposure to crypto asset markets, or after consulting a professional financial advisor. See the PDS for more information about the risks and other features of the fund. The PDS and the target market determination, the TMD, is available from our website, betashares.com.au. For everyone registered today, you will receive a recording of the session and the slides. We also encourage you to ask any questions throughout, and our speakers will answer them, or try to answer them at the end. Just a little bit about BetaShares. Since launching Crip, that makes our 64th fund on the ASX. We're extremely proud of our just over 22 billion in assets under management. We have a team of just over 80, so that's growing quite quickly. And at the core of everything we do is always providing intelligent investment solutions for Australian investors. Just today, we have been announced as the ETF provider of the year at Money Magazine's Best of the Best Awards. So a nice acknowledgement there. Our speakers today, it is a huge pleasure to welcome both of our speakers. Matt Hougan joins us from the US and is one of the world's leading experts on crypto, ETFs, and financial technology. He is the Chief Investment Officer of Bitwise Asset Management, a pioneer in crypto asset index funds with more than $1 billion in assets under management. He was previously the CEO of ETF.com, where he helped build the world's first ETF data and analytics system. He's an author, crypto columnist, and for Forbes, and a 3-time member of the Barron's ETF Roundtable. Joining Matt today is my colleague Alistair Mills. Alistair is responsible for supporting institutional and intermediary broker channels, as well as supporting the firm's capital markets activities. Alistair is a frequent host and speaker at our webinars, so you may recognise him. Prior to joining BetaShares, Alistair was based in London, looking after client relationships and due diligence for Northern Europe for Lixar Asset Management. So, gentlemen, welcome. If you'd like to join us, I will say goodbye and let you get started.
Perfect. Thank you, Sarah, and thank you very much, everyone, for joining us today. There's been fantastic numbers of attendance, and as Sarah mentioned, the interest in this exposure has just surpassed, I think, most people's expectations. So it's fantastic to be here, and thank you again for joining. Before we really get kick into things, it's probably worth just touching on what the crypto economy is, because we'll be Matt specifically will be covering this in a bit more detail. But the crypto economy, just like any other economy, really is the entire ecosystem surrounding that, and in this case, the digital asset space. So that includes the digital assets themselves, so things like Bitcoin and Ethereum, the actual infrastructure and platforms behind it, so the companies really driving that ecosystem, which are the companies held within Crip, so we'll be talking about them in more detail. But then you've also got the investors and the participants who, like yourselves, are the ones using digital assets or investing in the companies as either a medium of exchange or a store of value. The entire crypto economy really covers the transactions, the ownership, and the creation of digital assets themselves. So the entire universe beyond just the actual crypto assets. Historically, there have been two main ways you can access this space, either through the digital assets themselves, and within that there are two key ways of accessing. There's been through an exchange, and how regulated these are can vary on the exchange themselves, but there have been some difficulties in terms of the cybersecurity or risks of losing assets. That's that way. Secondly, you've got actual cold storage of holding your own crypto assets, and this may suit some investors, but there are also some intricacies doing it that way. And I'm sure many of you have heard the stories of investors losing their 25-word passkeys, sitting on huge amounts of various crypto assets and being completely unable to access those. On the other side, investors, and for quite a long time now, or at least a couple of years, have been able to invest in the actual companies behind the crypto ecosystem, whether that's some of the miners or some of the exchanges. And these have been listed on developed exchanges, and investors have been able to access them through individual stock positions. It's worth touching on why we actually wanted to launch an ETF in this space. And it centers around providing all of those traditional ETF benefits. So you've got the fact that it's an Australian domiciled regulated unit trust. Your assets are held in custody with a third-party custodian. You've also got all the traditional benefits of liquidity, transparency, and traditionally a low cost of ownership. And you can gain access to a broad range of companies and a diversified basket in one single trade, covering the entire gamut of the companies within the crypto economy. One of the other key benefits of enabling investors to access this through an ETF or a fund is the transparency of now having this asset class being accessible is where it sits with the rest of your portfolio, and you can really start to build a robust asset allocation and see how these sorts of companies interact with the rest of your equity bucket, with your fixed income and other different asset classes. So it's a really exciting development that investors can now access the companies in the crypto space via an ETF. So with that, I mean, I'll hand over to Matt Hougan, and like Sarah mentioned, it is an absolute pleasure to have Matt joining us from the US. With not only his absolute experience in the crypto universe, but in ETFs in general. So we really feel there is no one better placed that could be speaking from Bitwise and from the global universe on this space as well, or the investment universe nonetheless. So Matt, I'll hand over to you now.
Oh, that's quite some nice words, Alistair, and really pleased to be here. Pleased to be here with all of you. Also excited to be partnered with BetaShares to bring this product to the market for Australian investors. As mentioned, there are these two pathways to gaining exposure to the exciting things that are happening in the crypto economy, either by accessing Bitcoin and Ethereum directly, or by investing in these picks and shovels companies that are building the infrastructure that allows the crypto economy to thrive. I'll say in my own personal portfolio, I hold both, and many investors we work with do the same. I'm going to start by telling you just a little bit about who Bitwise is, where we come from, what we've done, and why we've been able to establish an expertise in the crypto market. And then I really want to dig into what these companies are, because I think by telling some stories and giving some examples, of the kinds of companies that are in a basket like Crip, you can start to get a feel for how important these are to the growth of the digital asset or crypto economy, and why it may be a relevant position to take on for certain investors looking for a certain exposure. So just first about Bitwise. Bitwise is a specialist crypto asset manager. We're one of the largest crypto asset managers in the world. We've been in the market since 2017. We're best known for having created the first and today running the world's largest crypto index fund. It's called the Bitwise 10. We launched it in 2017. It holds Bitcoin and Ethereum and Solana, and we make it available to investors here in the US, in our home country. We currently offer a suite of crypto index funds, DeFi index funds, other assets, all in the US. We manage close to $2 billion in assets. We're pretty well known for having a long track record in this space and for leading with high quality education like we're doing today. There's some mention I have both a background in ETFs and crypto. I was fortunate enough to write the CFA Institute's Guide to Exchange Traded Funds in 2015, maybe the most established credentialism for financial professionals. And this year I wrote the Guide to Bitcoin, Blockchain, and Crypto for the CFA Institute, which came out in January of this year. So Bitwise, best known for being the leader in crypto indexing worldwide. We literally created the category, and we created the index that underlies the Crip ETF. If you want to go to the next slide, I'll just say one more thing about Bitwise. This isn't a Bitwise commercial, but it is important to know who's backing the index that underlies an ETF. And what I've shared here on the screen is the bios of some of the executive leaders of our 50+ person company. And the important thing to take away here is that these bios span two backgrounds. About half of our company comes from traditional Silicon Valley tech companies, firms like Google and Amazon, Instagram and LinkedIn. The other half of our company comes from the traditional asset management world, firms like BlackRock, Goldman Sachs, Deutsche Bank, JP Morgan, myself from the ETF world, and indeed, I actually edited what was the Journal of Indexes, the only academic publication on index investing. That combination background of tech expertise and indexing and asset management expertise is important because crypto is an inherently technological category, right? It's built on software, it's built on blockchain technology. And so we need that tech expertise to be able to understand the asset class extremely well, but we pair that with decades of experience in traditional asset management and indexing to ensure that our indexes are fit for purpose, that they capture pure play exposure of the market, that they minimize turnover where that's appropriate, and that they're designed to a professional standard. So that's Bitwise in a nutshell. If you want to go on to the next slide, we can get into the meat of it. A lot of people know about Bitcoin, about Ethereum, about Solana, and other crypto assets. And increasingly, investors are becoming aware that underneath the surface of those headline assets, there is this entire infrastructure emerging, the picks and shovels, the core plays, the industries that are driving the crypto economy. And what I'm going to do in the bulk of this presentation is walk through a few examples of the kind of sectors and the kind of companies that are doing this. You see them here on the screen, from crypto miners to mining equipment manufacturers, to exchanges like Coinbase, to asset management firms, and even to banking companies that service the crypto economy. There's a vibrant economy without which Bitcoin and Ethereum wouldn't exist. And if you want to go to the next slide, I can make that maybe a little bit more concrete. The first segment of the index that underlies Crip, of the Crypto Innovators Index that Bitwise created, the first segment, the largest segment, is crypto miners. You've probably heard about crypto miners, and maybe you have some questions about how mining works. The way I like to talk about crypto mining is to think about your bank. When you go to your bank, what does your bank do? Well, one thing they do is they process transactions and they securely hold your money, right? If you send in a check through your bank, they'll process that transaction, send it to the next person, and they hold your money and they charge a fee for that service. What crypto miners do are the same thing, just in a different way. Crypto miners are a decentralized computer network, hundreds of thousands of computers spread around the world maintaining the Bitcoin blockchain, the Ethereum blockchain, etc. They run specific software programs that help them process transactions and secure the database. And for that, they're paid a fee. They're issued new Bitcoin from the Bitcoin blockchain. They're paid a fee by people who want to use those blockchains. In the early days of crypto, this mining activity was done by computer scientists on an individual basis, working through laptops. But crypto is no longer a grassroots industry. It's now a $2 or $3 trillion US market. It's a very large, established institutional market. And so the activity of mining the crypto networks, of acting as miners for blockchains like Bitcoin or Ethereum or Solana and so on, has become professionalized. And there is now a wide array of publicly traded crypto mining companies that create databases, often near renewable energy sources, and install hardware to mine crypto assets like Bitcoin. You can see here on this slide that the revenue growth we've seen in this category of the market has been extraordinary. Crypto miners, publicly traded crypto miners, are forecast to reach $1 billion in US revenue in 2021. That's up from just a few hundred million in the year before. And the forecast going forward is for that to continue to increase. This is an institutional industrial scale segment of the market without which the Bitcoin that you know and love, the Ethereum that you know and love, could not exist. So this is a really important piece. Maybe we can go to the next slide. If you think about this ecosystem that underpins crypto, with crypto miners providing sort of the core architecture that keeps the Bitcoin and Ethereum and other blockchains running, the next segment to think about is the crypto mining equipment manufacturers. So again, in the early days of crypto, mining activity took place on regular laptops. You could literally buy a laptop and start mining Bitcoin. But today, again, it's become an institutional market. And in order to compete as a crypto miner, you need the latest equipment. There are semiconductor companies, right, the equivalent of Intel or AMD, but specific to the crypto economy, creating equipment to sell to those crypto miners. You see a picture of one of the highest end crypto mining equipment pieces on this slide. And this is increasingly publicly traded companies with high revenue growth that have multi-year contracts to sell their computer equipment into these publicly traded miners. So you have miners, you have mining equipment manufacturers. Maybe if we go to the next slide. This is the third piece of the pie, and it's maybe the best known piece, certainly the fastest growing piece, and a critical piece if crypto is going to continue to grow and scale, which are exchanges and custodians. Now, the largest company in this space by far is Coinbase, US-based company, came to market in April of this year with a $75 billion market cap. To contextualize how large that is, how significant that is, that market cap was larger than Goldman Sachs when it came to market. Coinbase and other publicly traded exchanges and custodians do two things that help support the crypto economy. For one, they make it easy for investors to enter the crypto economy. If you want to buy Bitcoin, you have to go through a service like Coinbase to be able to buy Bitcoin. If you want to trade Bitcoin for Ethereum or Ethereum for another asset, you're likely to use a service like Coinbase. They play the same role for crypto that traditional brokerages play for stocks. The other thing that they do is they've established high quality institutional custodians that can help hold crypto assets in a secure fashion, either for funds or ETFs or directly for investors. As mentioned, you don't want to be the person who forgot your 25-digit code and lost $100 million of crypto or even $1,000 worth of crypto. And so these custodians help make it easier to do this. Again, you can see here on the slide, the revenue growth in this segment of the market is extraordinary. Coinbase is forecast to lead revenue of listed crypto exchanges past $7 billion US in 2021. That's up from only about $1 billion in revenue last year. And a lot of that is not new companies coming to the market. It's companies like Coinbase scaling. Coinbase, despite being such a large company, is growing its revenues about 300 or 400% year over year based on recent quarters. Also, impressively, even while having this high level of growth, it's been operating at extremely high profit margins above 30%. Usually when you have that extraordinary high growth, you're operating at a loss. You're thinking about fast growing technology companies. One unusual part of the crypto equity ecosystem is that we've seen extraordinarily high growth with extraordinarily high profits, in part because large entrenched competitors have been afraid to enter this market. Usually with a company like Coinbase, you would have seen traditional brokerage companies deciding they want to compete for this fast growing market. But because of reputational and other concerns, they've been unwilling to do that. And that's allowed Coinbase to grow to a really remarkable systemic size, again, larger than Goldman Sachs. So we have crypto miners, mining equipment manufacturers. Those are helping maintain the blockchains, Bitcoin blockchain and Ethereum blockchain. And then we have Coinbase, which is helping bring investors into the market. Maybe if we go to the next slide, I can talk about the next piece of this ecosystem. The next piece of this ecosystem is trading and asset management firms. If Bitwise were a publicly traded company, we're not, we're venture backed. But if we were a publicly traded company, we would be part of this ecosystem. These are companies that are doing specifically for crypto what BetaShares does across multiple asset classes. They're helping investors gain exposure to this space. Galaxy Digital is probably the best known and largest publicly traded company in the space. It's one of the largest positions in the index. And what we're showing on this slide is some of the core financial statistics for Galaxy's business over the last 12 months. It has multiple business lines. It does trading for third parties. It lends crypto assets, and it manages crypto asset funds. And what you can see is there's just been tremendous year-over-year growth, right? 100+% growth in every line of its business. You're probably putting together a trend here, which are the companies in this space are growing extraordinarily quickly. That is certainly true, or has historically been true. We'll get to some of the risk factors in the future, which are very important to consider. But the crypto economy, and you see this in the price of Bitcoin and other assets, has been growing substantially. The level of interest in that economy in terms of the number of investors who want to invest, the amount of venture capital activity, the amount of software development has been growing quickly. And so these companies that support the ecosystem have also been growing quickly, and that's what we're trying to show here. I think we have one more segment, and then I'll talk about how we put together the index. The last segment of our index is what we call supporting services. And these are services that are specific to crypto that help crypto economies grow. And there's really only one component, which is a bank called Silvergate. Now, banks are traditionally not the most exciting investments, but Silvergate is fairly unique. And the story of Silvergate, if I can dwell on it for a minute, tells you a lot about why this is such a unique corner of the ecosystem. 3 or 4 or 5 years ago, the traditional financial ecosystem was afraid of crypto. It was afraid of it for regulatory reasons. It was afraid of it for reputational reasons. And it was actually the case that 5 years ago, it was extremely hard for any crypto-focused company to even have a traditional banking relationship. As an example, when Bitwise was founded, we were backed by some of the largest venture capital firms in Silicon Valley, firms like Khosla Ventures and Craft Ventures, the leading angel investors in the Valley. And we couldn't get a bank account to pay payroll simply because we were operating in the crypto market. We had to call in favors from some of our angel network to even get in line at Silvergate. Silvergate was the only bank that was willing to bank anyone operating in the crypto market. The unique thing about being forward thinking for Silvergate is that they created a monopoly for crypto banking. It's almost literally the case that every single company operating in the crypto world today has an account at Silvergate. And that's allowed them both to grow their deposits at an enormous rate, and you can see that on the chart here, as well as develop really unique services. Because Silvergate controls the account of essentially every member of the crypto economy, you can move money to other accounts in Silvergate instantaneously, much faster than you would if you were moving from one bank to another. Also makes Silvergate an attractive takeover candidate if anyone else was looking to tap into the growth of this segment of the market. If you go to the next slide, that's sort of the summary of this ecosystem. I've tried to paint a picture of critical segments of the economy without which Bitcoin and Ethereum couldn't thrive. Even if you're bullish on Bitcoin, you're going to need this mining economy, mining equipment manufacturers, on-ramps and brokerages, asset managers, and supporting services in order for this world to thrive. It's akin to investing in gold mining companies as one way of playing investment in the gold space. The really unique thing, though, the thing I most love talking about this segment of the market is that despite growing at extraordinary rates, in many cases hundreds of % a year from a revenue perspective, and in spite being extraordinarily profitable, indeed Coinbase operating at a 30 to 40% profit margin, these companies are priced in line with other industries. What this chart is showing is the forward 2021 price to earning multiple of pure play crypto companies against the 10 sectors of the S&P 500 in the US. And what you can see is that crypto is priced akin to industrials or technology or healthcare stocks. It's not priced at a premium despite its extraordinary growth. I think that's because many people are skeptical of crypto. Many people are uncertain whether to enter that market. But if crypto continues to grow at these robust rates, this valuation will prove to be an interesting opportunity for people who are entering this market. If you want to go to the next slide. I say that because it is important to remember that there are significant risks in this market. If you look at my gray hair, you'll know that the crypto market is volatile. It's extremely volatile. And while crypto equities are not 100% linked to the price of crypto assets themselves, they still are linked to crypto. The long-term success of these companies relies on a positive outlook for crypto. If you think Bitcoin is going to zero, it's unlikely that Coinbase or crypto mining companies are going to be very valuable. And there are important things that are happening in this market that introduce uncertainty, whether that's regulation, market infrastructure, technological developments, or in general, the user adoption of crypto itself. So also important, crypto is a volatile asset class. We've had tremendous returns in the past. There's no guarantee that we'll have tremendous returns in the future. And there is a high likelihood of high volatility in this market. As an example, Bitcoin is the best performing asset in the world this year, but it's also had a 50% drawdown during this period. Volatility is crucial and a big part of this market. The other two things I would add, that analyst coverage on these stocks are limited. Many of these stocks have short track records. They've only been public for a year or less, and they don't have robust analyst coverage. So we have wide ranges of estimates. And in this presentation, I've shown you the median result, but there is more uncertainty in these estimates than there are for other assets. And last but not least, competition is rising. While companies have been, by and large, unwilling to enter the market and compete with these crypto native firms like Coinbase, that won't be true forever. We're seeing more traditional financial services companies eyeing the growth of crypto and looking to move in. That could be a positive if it leads to M&A. It could be a negative if it leads to more competition and maybe losing market share amongst these pure play native companies. So risk is an important factor. Maybe go to one more slide. As a word on how we assemble the crypto index methodology, the key in any thematic area of investing, and this is a thematic area of investing, and I know this dearly from my decade plus in the ETF industry. The key is you want to ensure that your index and therefore your ETF has as much pure play exposure to a theme as you can. In other words, there are companies, IBM is an example, which have divisions that focus on blockchain and crypto, but which honestly have very little to do with the crypto economy. I would be surprised if crypto accounted for even 1% of IBM's revenue. What we've done in this index is create two sleeves to the index. The first sleeve, which is the bulk of the portfolio, 85% of the portfolio, is allocated to pure play companies, or what we call tier 1 crypto companies. And these are companies that get at least 75% of their revenue directly from the crypto industry, or which have 75% of their net treasury assets invested in crypto. So companies like MicroStrategy, which effectively just own Bitcoin, are also in the index. This is the pure play segment, again, 85% of the index, the vast majority. The other 15% of the index are companies that have meaningful business initiatives in crypto, but have diversified portfolios or diversified businesses. An example of that is a company like Square, which actually changed its name to Block just today. So maybe moving more toward a pure play direction. But Square has always had, through its Cash App service, a significant business in crypto. It also has a larger, broad payments business. That second tier accounts for about 15% of the index. So 85% pure plays, 15% supplementary plays. And then we put them together into an index and we rebalance it on a quarterly basis. And of course, we have core rules about liquidity, size, geography, and other factors. I have one more slide, then turn it back over. The last piece of our index puzzle is focused on what this slide is showing, which is that this is a rapidly changing, rapidly emerging marketplace. This slide is looking at 8 of a broader array of companies that are looking to go public at very high valuations in the next year or 18 months. And we have a rule in the index called a fast entry rule, which is that any large cap company that is a pure play in the market that comes to market will enter the index on day 2 after its listing. So we're trying to future-proof the index against the anticipated entry of these large players, because this is a fast emerging market. I think that does it for my sector, my segment of this presentation. I hope this gave you a view of the important role that these crypto companies play in supporting the crypto ecosystem. Without them, again, you wouldn't have the Bitcoins or Ethereums of the world operating at the scale that they are today.
Thank you, Matt. That is, fantastic insights into the companies, the key drivers of the crypto economy, and as well as the index methodology. So, please, everyone, we've had hundreds of questions come through for Matt and myself. So just keep sending them through, and we'll look to get through as many of them as we can at the end of the presentation. That probably gives you a bit, huge insight into how the index is constructed and what are the key drivers behind it. So I'll focus more on the actual ETF that BetaShares has looked to bring out to provide investors exposure to this space. So the BetaShares Crypto Innovators ETF, or the ticker is CRYP, looks to replicate the Bitwise Crypto Innovators Index. And in order to do that, it will look to physically replicate all of the holdings within that index. And that is up to 50 companies. Currently, there are 32 which qualify. The management fee is 0.67% per annum. So in simple terms, if you put in $10,000, it would cost you $67 per year. And we've had some questions around distributions as well. So historically, these companies have not been massive dividend payers, but the fund will distribute any dividends it receives from the underlying and capital gains as a unit trust. So the historical index yield has been around 0.7% as of the end of October. Now, that can change in the ETF format. It's not a guarantee of going forward, but just to give you an idea that this has typically been more of a growth exposure rather than an income exposure based on the underlying dividends there. And yeah, it's listed on the ASX. You can buy and sell it using the ticker CRYP, CRYP. Just to give you a bit of an overview in terms of the breakdown across these different industries that Matt's gone into detail on. So you'll see the crypto miners, exchanges and custodians, so things like Marathon Digital, Coinbase, they're the largest part of the index and therefore the fund, but it's well diversified across each of these segments, which can have benefits to investors from that standpoint. And just finally, the key benefits of CRYP, and like I said, it really comes down to those standard ETF benefits. So a really efficient way for investors to get diversified exposure to the broad crypto economy and the companies driving that infrastructure behind it. The fund is Australian domiciled, listed on the ASX, and can be bought and sold very simply, similarly to how you would an individual share, but gaining exposure to up to 50 companies in that single trade. Again, it's really important to note that this is a regulated unit trust, so subject to the highest regulation of any other equity ETF on the Australian market. And it provides all the usual benefits of transparency of the underlying, low cost of ownership compared to some other investments, and real easy access there. Now, a lot of people have been very focused on the performance of not only this fund, but digital assets in themselves. So we felt it was prudent to put this slide up there to give you an idea of what the historical performance has been of CRYP's underlying index. And you can also see the relative performance of Bitcoin there themselves. And there are two really important things to note here, that whilst the annualized total returns have been very, very impressive historically, over 200% since its launch in December 2019, volatility is also extremely high. So this has been a very volatile investment historically and is expected to be so going forward. It is also important to note that whilst there is correlation to underlying digital assets, this is not the same as investing in spot Bitcoin or Ethereum or any direct digital asset. These are the companies, and we're not looking to replicate the prices of those digital assets. But it gives you an idea of how the two have performed historically. The other thing is past performance is not indicative of future returns, and because of the relatively new nature of the companies that make it into this index, the track record is fairly small, only going back just over 2 years. These are all things that are key to be aware of. Another thing we've been asked a lot is coming soon, will we be launching a Bitcoin and Ethereum ETF? The answer is yes. Watch this space. Once we have regulatory approval finalized, these will be coming through. We'll have 2 ETFs looking to provide exposure to the spot prices of Bitcoin and Ethereum. For Bitcoin, the ticker will be 1BTC, and for Ethereum, it will be 1ETH. Few questions as to whether these will be physical or through futures, and you've seen in the US market, they've been restricted to using futures-based or synthetic exposures. Our intention is to launch physical exposures, providing exposure to the spot prices of Bitcoin and Ethereum. So very much looking forward to when we can bring those out in the near future. Risks are incredibly important to focus on. Like I said, this should be considered a high risk exposure. Crypto assets are speculative, and the companies underlying this exposure are still related to that crypto economy. CRYP should be used as part of a diversified portfolio. It should be a small part of your allocation and should be for investors willing to be subject to high risk. Like I mentioned, the volatility of this exposure has been very, very high. There are all the traditional risks associated with equities and smaller companies, as well as the cryptocurrencies themselves. Please remember, this has all been general advice in nature. We've not taken into account anyone's personal circumstances. Seek advice from a professional before making any investment. Read the product disclosure statement and also read the target market determination. You can see what sort of timelines are recommended for this sort of exposure and what sort of risk bucket it sits within.
Hi, thank you so much, Matt. Thanks, Alistair. I'm just jumping back in to facilitate some of the questions. So Alistair has covered off some of the questions we've been getting around distributions and dividends. Thank you very much. And also just a reference to that holding timeline, which you can see in the target market determination. I might start off, Matt. There's been a few questions about investing ethically in crypto miners and cryptocurrency. So with the move towards ESG more broadly, how does the miners' high energy consumption remain sustainable in the investment space, both environmentally and socially? Do you want to tackle that one?
Yeah, it's a really important question, one that I care about deeply and think about a lot, Sarah. So thanks for bringing it up. I would say two things. One, it is true that Bitcoin mining equipment consumes a great deal of energy. Anyone who says that's untrue is not giving you the full story. They do consume a fair amount of energy. Now, I will point out that a majority of that energy is renewables, and there's a reason for that. Renewable energy doesn't necessarily follow the business rhythms of the world, and often renewable energy has excess energy. So people are building crypto mining equipment in places like Iceland that have too much energy as a way of recapturing that energy. So there's a strong renewable component. The bigger thing I would say, though, is that like many industries, crypto is moving from a carbon-intensive past to a carbon-neutral future. So there are new ways of doing mining that don't consume a great deal of energy, just like battery-powered cars don't consume a great deal of gas, right? We're moving from a gas-powered automobile world to a battery-powered automobile world, and the crypto economy is going to make the same transition. So I think people who are investing in crypto today are investing with the belief that having an alternative monetary system, having a more efficient financial ecosystem, lowering the cost of transacting and moving money, being able to automate certain financial transactions so that they are cheaper for individuals is a valuable service. And yes, we should all continue to move toward a more carbon neutral future. The industry is doing that, but we're just in that transition like so many industries around the world.
Yeah, great. There's another question here on why would you consider investing in crypto assets and not cryptocurrency? I think you mentioned at the start of the presentation you invest in both. So why would an investor consider crypto equities?
Well, I think there are a couple of answers to that. One is that for many investors, they're more familiar, right? You can think about valuations in these stocks like you think about other stocks. It's a traditional ETF that's available now and in your brokerage accounts. That's not true with something like Bitcoin, right? How do you value Bitcoin is a massive topic and not one that I could give a perfect answer on. Whereas these are traditional companies operating in a traditional ecosystem. I would also add that they have slightly different return characteristics. If the price of Bitcoin is volatile, an investment in Bitcoin isn't going to do particularly well. But it's actually the case that a brokerage like Coinbase that makes money on commission may do well in that sort of ecosystem. So my general view in investing, I'm an ETF and index guy, is the best approach is just to own the entirety of the market. In this case, that means owning both pieces, but certainly some investors will want one thing and some investors will want the other.
Mm-hmm. Great, and there's quite a lot of questions, Alistair, if you'd like to tackle this one, just on how actually you invest in the minimum investment and what exchanges Crip is available on, or what platforms.
Yeah, so similarly to any of our ETFs that we have at BetaShares, the fund's primary listing is the ASX, and you can access that through either any financial advisors should be able to provide some advice on that, but also direct brokerage accounts. And there's a whole heap of different ones out there. Your minimum investment amount on the fund level is 1 unit, which sits around that $10 to $12 at the moment. Different brokerage platforms will have their own minimums. So some of them are around $500, but in essence, it's very low minimum investment amounts traditionally for exchange traded funds compared to other unlisted funds, for instance, so low minimums.
Matt, why has gold not risen while cryptocurrencies have risen dramatically, although volatile over the last 2 years? I think we've made that reference between gold and cryptocurrencies a couple of times.
Yeah, it's a great question, Sarah. I think the answer is that the money that would have gone into gold because it was worried about inflation has gone into Bitcoin instead. I think it is in essence stealing that or serving as a sink for that capital. So I think there's a direct relationship. A lot of people are looking at Bitcoin as the next gold, and so they're choosing to allocate there. I'll give one quick example, Sarah. I won't go on and on. In the US, Paul Tudor Jones, famous hedge fund investor, been around for 30 years. In May of last year, he became very concerned about inflation, as many of us are. And he went through a process of evaluating all the different hedges, gold, real estate, growth stocks, Bitcoin, etc. And he ended up allocating 2% of his entire net worth to Bitcoin because he saw it as an undervalued inflation hedge. So I do think that's one example, but I think there are 1,000 of investors like that. I think Bitcoin has been stealing gold's thunder to a degree.
Okay. Alistair, there's been quite a few questions about the fund only launched not quite a month ago, and it has obviously launched with a bang, and people are concerned that the price has fallen. So do you want to just touch on that a little bit?
Yeah, look, I think it comes down to the volatility. Like you mentioned, it's only been around for less than a month. We've had some very strong days and then some more negative days. The key focus for investors is this is a high risk investment, and therefore you have volatility. And if you look at the target market determination, it will outline that. The recommended investment time frame is either for long-term investors, so say 5+ years, rather than just looking at that 3-week period, or there may be the opportunity for investors that like to trade through shorter periods and take advantage of those pullbacks and trade more frequently. So look, I think it's unreasonable to assume that certain exposure will go up every day through periods. And yeah, we just really want to highlight how this is a volatile exposure. So I think that's fair.
A few questions here on the impact of regulations on these companies, given a few are early on in their journeys. What impact will regulations have on these companies in the developing crypto software space?
Yeah, I'm happy to start. Alistair can join in. I think there's a secret here, or at least something that's not well understood by many in the market, which is that clearer and better regulation is the key to unlocking the future of crypto and therefore the future of these companies. If you think about what crypto is trying to do, it's trying to build a new and more efficient financial services industry, a new and more efficient and more rules-based monetary policy. It's trying to have an impact on the quote-unquote real world. And many people, many smart investors, many venture capital investors think it could fundamentally disrupt those segments of the economy. But it can't do that if there isn't good quality regulation. So a lot of people worry about regulation coming in and quote-unquote crushing crypto. I think the reverse is true. As long as the regulators get it approximately correct, long as they don't, dramatically overshoot, clearer regulation is going to unlock this market to really begin impacting the real world. Now, that was a big if. Regulators don't always get it right. So there is massive regulatory risk, and again, to hit that regulatory risk side. But it is one of those two-sided swords, where on the one hand, you have regulatory risk, and on the other hand, you have better regulations unlocking the full potential of the market. And we'll see where we split out there.
Yeah, I mean, from our standpoint, I think that's bang on. The more regulation you have, it almost legitimizes the investment side. So from an Australian standpoint, what we've seen is ASIC, the key regulator here, has released the findings of its consultation and has effectively given the go-ahead for Australian listed Bitcoin and Ethereum ETFs, and now it's onto the exchanges to formulate how those are going to come to market. So regulators are taking more interest, and we're seeing positive developments as opposed to necessarily all being around risk. So the more regulation you have, the more likely you're going to get a really robust ecosystem coming through.
Just a few questions, Matt. This one's probably for you on the differences between Crip and the Bitwise Innovators Index to others that are available. You mentioned Bitwise has a number.
Oh, yeah. Well, I think there are two differences there, Sarah. When I was talking about Bitwise, in the US, we offer crypto asset exposure, so index funds that track a basket of Bitcoin, Ethereum, and other crypto assets. BetaShares is working to bring Bitcoin and Ethereum crypto ETFs to market. Those would be more similar to our index-based products. We just hold a basket instead of single assets. So Crip is different in that way, in that it's equities and not crypto assets. The other place that it differs from competing blockchain and crypto equity ETFs around the world is that the index is designed, as I mentioned, to capture as best it can a pure play exposure to the market. So we really focused in designing the index not to capture what I call crypto and name only companies, crypto companies or companies like IBM that have small efforts in crypto but don't focus on it. And I think if you dug through the holdings of many other blockchain ETFs around the world, you would find a lot of companies that would raise your eyes. I was looking at one the other day listed in Europe that had companies like Rio Tinto and Alcoa, and yeah, exactly. These are not crypto companies. If you look in our index, it's companies like Silvergate, it's companies like Coinbase, it's companies like Marathon, it's companies like Riot. Check, 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 check. These are pure play crypto companies. So that's really what we've focused on building.
Mm-hmm. Alistair, a few questions potentially from advisors here, asking if there's any research from Lonsec Morningstar on Crip currently.
So we have had reviews from a number of different research houses, and they're in their review process. So we are expecting published reports to come through soon from a number of different research houses, and we will make the market aware as soon as those get finalised.
Mm-hmm. Another one for Alistair, and perhaps to the regulation point. What do you think of CommBank allowing crypto to be held in regular bank accounts?
Yeah, it's an exciting development for the Australian market, and like I said, it's another very large player in the Australian market, just starting to legitimise this as a regular investment, or for investors looking to hold these sorts of assets. So certainly a positive. And again, in order to do that, they've had regulatory approval. So you can just see those positive steps taken by Australia, which is really starting to become quite a leader when you look globally, particularly around Asia, as to being a pioneering market when it comes to enabling access for investors across a whole varying different array of platforms.
Mm-hmm. Just a question here, Matt, if we can just jump back to the PE of the crypto sector. You spoke a little bit about that. And what are your thoughts on that being impacted by inflation and tapering?
Oh, those are two sides of different coins. It's certainly the case that a lot of investors look at Bitcoin specifically as an inflation hedge, and to the extent that inflation concerns remain front and center around the world, that should benefit broadly the crypto ecosystem as a release valve for that, and therefore the companies involved here should benefit as well. When I think about tapering, one thing that we saw over the weekend when Jerome Powell here in the US quote unquote retired the word transitory before inflation and talked about tapering happening sooner rather than later, was you saw a short-term shift back to all risk asset prices, and that included crypto assets, and by a transitory property, some of these crypto stocks. It's something that we've seen historically over the years that we've been looking at the crypto market. During acute risk-off periods, Like the days, weeks around announcements around tapering, crypto assets often sell off as other risk assets do. But over long periods of time, we don't see much impact or correlation. So I'm more on the side still of worrying that the risks are burdened on higher inflation than we want or expect. That's what we're seeing out of OECD forecasts. That's what we're seeing out of the Fed in the US. Other central banks are more worried about that. And so I'm bullish. But yeah, if all central bankers aggressively tighten and stop doing QE, that could be a setback for the crypto economy. I think that may be unlikely, but it's certainly within the world of possibility.
Mm-hmm. And just one on the actual index, how active is the portfolio managed? Do you add or subtract companies to the ETF after it's launched? I think you went through that in the index methodology, but just how often the companies change.
Yeah, we reconstitute it on a quarterly basis. So every quarter we look to see how the market evolves. And then, as I mentioned, Sarah, if there's a large IPO, that has a special rule that allows it to enter on the next day. And both of those are designed to help make sure the index reflects what is a rapidly evolving market.
Mm-hmm. One for you, Alistair. How will the fund handle taxes, and where is the custody going to be held?
Yeah, that's a good question. So as a regulated unit trust, taxes are handled like any other. So any dividends received from the companies within the fund, any capital gains will all be paid out to investors on at least an annual basis. So at the end of the tax year, you'll get a tax statement and you'll receive those distributions. We do enable dividend reinvestment. So if you can go into Link Market Services and reinvest those dividends automatically. The question around custody is a very good one. So the custodian for this fund is Citibank. So all the assets within the fund are held with that third-party custodian in the name of the funds and are not on BetaShares' balance sheet. They're held in third-party custodianship with Citibank.
Mm-hmm. I mean, maybe just one for both of you in closing. Why or should investors start thinking about crypto as a genuine part of their future portfolios? So I think we've sort of covered it, but you know, really is the time now to be thinking about it.
I'll start and then give Alistair the last word. I think the answer is absolutely. Crypto, I know a lot of people are still skeptical around crypto because they don't see it being used as a currency on a day-to-day basis. But the explosion of applications we're seeing in the crypto economy right now are really incredible. That could be Bitcoin as digital gold. It could be Ethereum as the foundation of NFTs and DeFi and Web 3.0 and the metaverse. You're seeing a sort of new opening of how the internet could work, how the financial system could work. It's all being built on crypto. You have some of the smartest investors in the world coming into the space, and you have a vanishing window before it's commonplace, before everyone has it in their portfolio. So it's risky, and you need to think about those risks and the volatility. But I think it has a place for the right kind of investor.
From our standpoint, look, we're seeing more and more investors, like just from the launch of this fund, setting records on its first day, and then the subsequent flows in the coming weeks, just being extremely positive. Anecdotally from the market, whether it's advisors or institutional investors, more and more of them are starting to take note of this space, whether it's because their own clients have been asking them around how they invest in the space, whether through the companies or through direct exposure to the underlying digital assets. And you've seen, like Matt mentioned, some really smart investors, whether it's from the global landscape, but also some of the more local institutions and super funds, just starting to make it public that they're really considering crypto assets as part of their asset allocation, starting to look quite closely. So from an investment standpoint, and I'll only really speak about the vehicles, but through something like Crip, absolutely, there really does seem to be an appetite for that space across the entire segment of the market. And then when it comes to the spot products, so Bitcoin and Ethereum, look, it's been made known that institutional investors are starting to look at this, and the ETF vehicle makes it really easy for those institutions to actually gain exposure to these parts of the market, rather than having to rewrite their own legal documentation to hold crypto assets directly. They can actually use the ETF as part of their asset allocation very, very simply. So I think we'll see this area grow just based on the accessibility that ETFs and other investment vehicles are bringing to market.
Thank you, both of you. It's awesome to be talking about this sector and the fund. We've just been blown away, and we could have talked for an hour more. But Matt, I'm conscious you need to get out for the last of that light and enjoy the rest of your evening. But just in closing, we'll send you the slides, we'll send you a recording, and there's been so many questions. I think it definitely warrants a follow-up session. Matt, maybe next year we can get you back.
Love it.
We have our website. We've referred to it many times. We have a newsletter, a weekly snapshot of it's called Off the Chain, and it talks about cryptocurrency, crypto assets, and just a short, coverage. Please follow our socials for the latest, and we will send you an email after this session. Thank you so much for coming, and enjoy the rest of the day. Thank you.
Thank you.
Thanks, everybody.